Good morning, everyone. It's a real pleasure to be here with all of you today. Our session is a bold title, A Great Shift in Trade, Capital, and Strategy. And I don't think anyone in this room really doubts that the world around us is really shifting. The only question is how fast and in what direction. My name is Won Mo. I'm a partner here in McKinsey Korea, and I'm delighted to be moderating today's session, joined by my two distinguished colleagues. On my left, I have Olivia White, senior partner in our Bay Area office, director of the McKinsey Global Institute. And I also have Jeongmin Sung, partner at MGI, joining us from Tokyo. And many of you may also know him from his decade in Shanghai, where he became one of the sharpest observers of China's evolving role in global trade. Now, for those of you who may be less familiar, the McKinsey Global Institute, or MGI as we like to call it, is McKinsey's economic think tank. They step back from the daily noise and they help us see the big picture. And I think right now we all agree that the big picture is nothing but calm. So Korea, as one of the most trade-dependent economies, sits right at the center of the turbulence. Export markets are fragmenting, supply chains are being rewired. Some call it decoupling, and others view it as rewiring. Either way, it's clear that we're entering a new era. So in this hour, we'd like to tackle three big questions. How exactly is the global trade being reconfigured? Number two, what can we learn from FDI flows, which are often a leading indicator of global supply chain? And third, most importantly, what does this all mean for South Korean companies charting their next decade of strategy? So with that, let's dive in. Olivia, let me start with you. So why is MGI talking about all these at this time? And how timely is this?
So first, it's a real pleasure to be here and to be in Seoul, and thank you. Who in the audience wonders whether this is a timely question? So I think the more time passes over the past year, the clearer it's become why we're concerned or looking at how trade, how capital might shift. And the fact is that it's not just a matter of how trade and capital will shift, it's how all of that might happen in a world where there's an awful lot changing. There's technology and the role of AI and what that means about technology of the future. What it means for work, particularly in a world where demographics is shifting, fertility rates are falling. That means that you have real shifts in which countries are young, have more workers. That influences trade. Energy we've been talking about a lot for the past, call it at least 15 years. In some regard, longer than that, or sort of from time immemorial, but you've got both a lot of considerations linked to an energy transition and net zero, but increasingly lots of thinking about, well, how are we going to power the AI? Where does that need to come from? How are we going to have enough energy in any given part of the world to power advanced manufacturing in these industries of the future? What stuff from the ground, what sorts of mining will be necessary for lithium, for nickel, for cobalt, et cetera? And then, of course, there's a question about who pays, where in the world, how are they going to pay, to what degree are they willing to make big investments? So you've got this confluence of a lot of really important stuff coming together that can be seen in the cauldron of how trade, how capital, how strategy are shifting. One point on terminology, if you don't mind, FDI. So FDI is foreign direct investment. And when we talk about foreign direct investment here today, we'll be talking primarily about greenfield foreign direct investment. And so that is money going across the border to help build new productive capacity, be it either a new factory or a meaningful addition to an old factory so that new stuff can be made, more stuff can be made. One last question for the audience before we go more, just to get a sense of who you are and to make sure we're talking to the broad range of folks in the room. Who here is affiliated with some form of company, some form of firm? Government? Not much. And then people, policy, think tank, academics, There are a number of you who didn't raise their hand at all, but so we'll do our best to guess that. At any rate, thank you. It's a broad cross section of people.
Jeongmin, anything to add?
Olivia talked about why this topic matters to MGI, right? And let me also talk a bit about Korean context as well. One more. Have you been to Vegas?
During my college years, yes.
Has any of you been to Vegas? Right? Yeah? Yeah? Yeah. I don't know what you did in Vegas or what one more did in Vegas, because what happened in Vegas stays in Vegas. In terms of trade, what happened to Korea doesn't stay in Korea. It matters. It has significant implication to the world. Right? That's why we are paying attention to this topic, and that's why we are in Korea. You talked about high trade intensity. Right? Can you guess the share of export of Korea out of total GDP? 28 more. It's about 40 to 50%. Japan, China, about 20%. Right? And for many trade economists, Korea is a treasure box. Do you know why? So we are in September. When do you think the Korean government will release the trade data of September? When? Any guess? October 1st, 9 a.m. Yeah? So, Korea, what Korea does signals a lot to the world, right? And also at the same time, Korea's trade profile, export profile includes semicon, automotive, chemicals, etc. So we can read a lot of global trends out of the choices that Korea makes. So that's why we pay attention to this topic.
Thank you for that. Why don't we get to the meaty topic? So since April, we've seen the global trade landscape, changing dramatically with President Trump's what we call, Liberation Day tariff, and we can really see the scale of disruption as well as uncertainty around the world. So, are we genuinely headed towards, deglobalization, or is it something else? And maybe we start with Olivia.
So let me say a little bit about what had happened before Liberation Day, which, by the way, April 2nd is actually my birthday. And so I'll forever think about it differently. So one thing that we've been doing at McKinsey Global Institute over the past 3 years or so is looking at how trade across the world is shifting. And we'll say a little bit more soon. But the fact of the matter is we started seeing real signals of shifts in patterns of trade in 2017, 2018. And I'm jumping ahead a little bit, but we also started seeing real patterns in shifts in foreign direct investment announcements at that point. So there was a lot that could be seen from Trump 1 tariffs, but also from collective decision-making on the part of companies across the globe for almost a decade before April 2nd came. And there is absolutely no question that in some real important sense, April 2nd was a real shift in signaling to people, no, it's true. Big change, the way things are going to operate may shift henceforth, but it actually wasn't so new. And part of, I guess, what we can talk about today is what did one see before? And what does that tell us about bigger and deeper trends that are going to be flowing throughout these questions of trade and capital and strategy?
And Jeongmin, maybe add a little bit of color around how that impacted Korea.
Yeah. So our view is that so whether on your question about whether decoupling or deglobalization is happening, our view is that it is less about decoupling, but more about reconfiguration. And we looked at the other different geometry of global trade. First dimension that we looked at was the geographic distance of global trade, which is basically measuring the physical distance of average dollar of trade. Between Phuket and Bali, which one do you prefer?
So my wife definitely prefers Bali, so I'll go with that.
That's good, right? So because 15 years ago, the average geographic distance of global trade was about 4,600 kilometers. That was Seoul to Phuket. Today, it is about 5,200 kilometers. That is from Seoul to Bali. So your wife will be happy, right? Because from that perspective, globalization is continuing. But then we also looked at another dimension, which is geopolitical distance that Olivia also talked about, which is measuring how aligned trading nations are. And in that sense, we see a tipping point of declining. And Korea as well. So Korea's geopolitical distance declined about 5%. And that is largely because Korea exported much less to China. So China used to be about 1/3 of our export destination. Today, about 25%. And China used to be the source of surplus for Korea. Now, China became a source of deficit of Korea. And that is because 70 to 80% of Korea's export to China is intermediate goods. And China is more consuming more of what it is producing. So that is what is happening in the world and also to Korea.
And just picking up on some of what Jeongmin has just said, effectively, if you look at these two dimensions of geometry of trade, geographical distance and geopolitical distance, what Jeongmin outlined is an indication that we are seeing friendshoring, people trading more with geopolitically aligned partners, not nearshoring, which is a little bit of a turn on the head of some of what's being said. And we think it actually means, then you come to this question, are we decoupling? Well, are we going to be moving in a direction that has us trading more with people who are, at least in certain kinds of domains, closer to being friends? But this is a super constrained problem, okay? And what I mean by that is you can't just say, okay, look, let's decouple. Well, why not? If you look across the world and you look at all goods that are traded, all types of important goods, from energy, so natural gas, oil, coal, and then increasingly renewables. You look at minerals, I mentioned a bunch. You look at soy, you look at rice, you look at wheat and agriculture, but you also look at electronics, you look at cars, you look, EVs more broadly. You look at data and data centers. When you look at that big universe of thing, every single region in the world depends on another region for at least 25% of its domestic consumption of one important and many times multiple important things. So if you're in Asia, if you're in Europe, if you're in China, you're very, very dependent on lots of parts of the world for those resources that I talked about, the energy, the minerals, the agriculture. And so we can talk about whether we're decoupling, but the world is caught in this embrace, which means that there's certain degrees of freedom that we simply don't have over short periods of time.
So I hear both of you loud and clear that it's not so much decoupling, but rather reconfiguration. But how about US and China? And let's talk about that a little more, because no discussion on this topic will be complete without talking about US and China. Do you think that US and China decoupling is real, or do you think it's more of a rhetoric than reality? And where do you see the sharpest realignment potential? And who do you think stands to gain from this realignment overall? And maybe Jeongmin, since given your...
It's a tough question. Therefore, let me also ask the audience. What do you think? Between US and China, are we getting decoupled, or do we see decoupling or not? What do you think? Yes? 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 No? Maybe? Usually maybe is always the right answer, right?
It's a non-committal audience.
Yeah. So if you look at what is happening on the surface, right? It seems that, yes, US is decoupling from China and vice versa, right? So if you look at the headline trade statistics, right? So US manufactured goods import from China, the share fell from 25% before to about 15%. So US is importing much less from China. So decoupling may be happening. Do you agree with that observation? Yeah, maybe, yeah? But not so fast, right? So we look at numbers in greater detail, and if you look at so-called value-added measure, right? So value-added coming from China out of total US consumption. So out of total US consumption, how much value actually came from China, that level didn't decline at all. Why? Why? So on the surface, US is importing less from China, but the value from China is still there. And that is because, right, so there's a lot of so-called connecting economies, right? So there's rerouting from China to somewhere else to the US, right? So for example, take laptop as an example. US import more laptop from Vietnam. Vietnam imports more laptop components from China, right? So therefore, that connection is still there. Right?
And in fact, we define this thing called the rearrangement ratio, which helps us look at how much the US gets from China today, how much China exports to the US, for each individual good. We look at about 6,000 different specific goods. And we say for each one of those, how does the amount that the US imports compare to the total available market in the world that's sent by people other than China to countries other than the US? Because in principle, if the amount that the US buys is small compared to that other available market, well, then the US could just quickly rearrange and buy from people other than China. But if it's not, it becomes a lot harder. And it turns out that you get a wide range of different rearrangement ratios. So there's certain things which are easy to rearrange. So take cotton t-shirts, okay? China supplies, the amount of cotton t-shirts that the US buys from China today is about 1/20th of the total available market in the world. And that's because you have a whole host of other producers of cotton t-shirts as textiles today. Wouldn't have been true maybe 10 years, 15 years, 20 years ago, but today, yeah. You can buy from Guatemala, you can buy from Bangladesh, you can buy from Vietnam, et cetera. You can buy from Nepal, right? A whole set of different places. On the other hand, let me give you a silly example and then I'll give you a serious one. Christmas decorations. Today, the US buys $3 billion worth of Christmas decorations every year from China. The available Christmas decoration market in the world outside of China to the US is only $600 million. So there's not rearrangement potential there. And that's true for other important products too, and laptops is really prime among them. Of course, rare earth metals, there's not a lot bought, but they're extraordinarily important in particular applications, as people now know well, because they're sort of all over the news. That's another thing that's very, very hard to rearrange. So you have this dynamic that Jeongmin was talking about, and you have a whole host of products where this notion of rearrangement is hard, and then somewhere it's actually reasonably straightforward.
So this means that without Christmas decoration from China, Americans cannot meet Santa Claus. Right? So it's a big deal. But then also, if you expand the scope, right, not just between US and China, but also globally, right? So there is a product called globally concentrated trade. Right? But do you know what durian is? Do you like it? Hate it? Yeah. So it's very extreme, right? You either like it or hate it. But then durian stands for something very interesting in global trade. 90% of durian export is coming from one country. Which country? Thailand. Yeah, Thailand. Yeah. So likewise, if you expand the scope, there is a category called globally concentrated products, meaning 3 or fewer nations account for more than 90% of global export, like rare earth or laptop or soybeans, right, etc. And because of the existence of these products, it's very hard to decouple, especially in the short to medium term. Therefore, what we are seeing now is more of a reconfiguration.
Let's shift gear a little bit and talk about FDI. In the upcoming report by MGI, you suggest FDI flow as leading indicators that give us foresight on the structural shift that we've been discussing so far. So based on your most recent research on FDI flows, what have we learned about where the world is headed? And maybe we start with Olivia.
Yeah, so where money is going today, or where companies announce they're going to be putting their money today, signals strategic intent. And it signals where facts on the ground, like actual factories, will be built. And that signals a shift for trade tomorrow. Couple of facts. So the first is when you look at these dimensions of geometry, geopolitical distance and geographic distance that Jeongmin talked about, we see the same trends in FDI that we see in trade, so it's traveling further over time, and the geopolitical distance is shrinking. But the geopolitical distance is shrinking much faster, about 2 times faster than that of trade. And so one has to wonder, okay, is this because we're seeing advanced signal that geopolitical distance of trade will be going down yet further? And perhaps are we seeing advanced signal that the sort of dynamic that Jeongmin was talking about is difficult to unwind at some stage as firms build more productive capacity will shift more. Now, really interestingly, though, there's a couple of other shifts that are happening. So the second, along with this the geometry shifting, is that FDI is increasingly going into industries of the future, so AI infrastructure, advanced manufacturing like EVs, like semiconductors, and then the resources that power them, energy and minerals. Today, about 77% of all FDI announcements are going to those things. That's up from about 50% pre-COVID. So it's a real and significant shift. And so what we're seeing is in some of these important areas, you see money going more towards geopolitical allies in these industries of the future. Final point is that we're seeing those deals getting bigger. So if you look at megadeals are deals that are over $1 billion, and that's about 1% of total deals by number. It's about 50% of total deals by dollars. And those are overwhelmingly the things in these industries of the future, partially because it takes quite a lot of money to build a data center, to build a semiconductor fab, to build an EV or a battery plant. And so you have to put in quite a lot of money to play, at least in a big and central way. So we're seeing these real shifts of geopolitics, but also like the stakes, the strategic stakes around these bets for stuff of the future are getting much, much bigger.
And given Korea's focus on some of these industries, what would you say that, what have you learned about FDI flows for Korea, Jeongmin?
Yeah. So a wise man once told me, if you want to test your friendship, see if you can borrow some money. Because money talks, right? And also, that's why Olivia said it could be a leading indicator, right? So when companies put some money into action, that's a strong signal of a serious strategy, right? So that's why we looked at FDI. Olivia, do you know who Red Devils are? Have you heard about the Red Devils?
Red Devils? Yeah. No, tell me.
Yeah. One more. Are you a Red Devil or not?
For sure I am, I think. Yeah.
He's a Red Devil?
Are any of you Red Devils or not? Yeah. So we have the blood of Red Devils, right? So Koreans are Red Devils. Yeah. They are basically the cheerleading team of the Korean national soccer team. So you should come to Korea when there is next round of World Cup, and you will see them everywhere, right? And Koreans are very passionate, right? And emotional, right? About things, right? So therefore, the changes that Olivia described globally, you see the same trend, but in an amplified form in Korea, right? So Olivia talked about FDI molding the future, the industry of the future, maybe somewhere around 77% of the money going into that future shaping sector. Can you guess that number for Korea? Any guess? 80%? More than 80%. Yeah, 90%. 90% of the FDI outflow from Korea is heading towards that future shaping sector. Olivia also talked about declining geopolitical distance, right? 2 times faster than that of trade, right? It was about 13% or so. Globally, geopolitical distance of FDI declined by 13% or so. What about Korea? Any guess? 20%? 30%? Actually 40%. Right? So that the change of geopolitical distance of FDI for Korean companies again is much faster. Right? So that's why again, right? So what Korea does matters not only to the people in Korea but also for the world, right? Because we can learn from this big shift.
So I think I'm quite clear on the impact, by region and by country as well. And I think both of you have started to allude to this a little bit now. But let's talk about different sectors. And at sectoral level, which industry do you think are, most poised to experience this, shakeup from FDI flow change? And maybe Olivia, starting from you, and you start talking about the data centers, AI. We'd love to hear more about that.
Yeah, so if you look at if I talked about future shaping industries, If you think about which specific future shaping industries are seeing the most shift, and FDI shakeup is the name of this new report that's coming out. So indeed, data centers are a big one, and that's because of AI, right? So there's this huge desire to make sure that companies have the ability to do the computation that they're going to need to, given what the future of AI looks like it may be. And what part of what's happening here is you have real requirements for energy, but you also have the fact that computation is done better close to where it actually needs to be used because latency is lower, so things travel faster. But also you have increasing numbers in a world that has geopolitical sort of considerations galore. You have increasing regulation on localization of data. So lots of money going into data centers and lots of money going into data centers all over the world, at least where energy is available, so that data can be close to where it is going to need to be consumed in a way that's localized. So that's one big and really important one, and I'm sure Jeongmin will talk about it for Korea. You want to talk about this one, then we'll come back and do another one? Yeah,
So,
maybe.
So we talked about Korea being a very big outbound investor. You know, we see something very interesting about data center. Actually, Korea receives a lot of FDI into the data center. So FDI inflow into Korea in the data center segment actually increased by 3 times, right? So US hyperscalers are investing in Korea, right? So on the one hand, you know, this is a good opportunity, right? So Korea can step up and become a regional hub to serve the North Asian demand, and then also Korea has a lot of solid digital infrastructure. We keep generating a lot of interesting K-pop and K-drama and so on, right? So therefore, there's a lot of demand related to digital, and then that demand can be served better through that investment. On the other hand, it also means increasing competitive intensity, right? So everywhere in the world, we discussed the concept of digital sovereignty, AI sovereignty, and this global competition will increase the level of the competitive intensity for local players as well, right? So therefore, as a local leading player, how to deal with those global competition, that's also another question that we need to think about.
So then I'll talk about a couple of the other industries. These are now within the realm of advanced manufacturing. 2 really big ones right now for FDI. One is semiconductors, particularly leading edge chips, and the other is EV together with batteries. And in both of those instances, we see really quite dramatic sort of rewiring in the way that money is flowing. So I'll start with semi, and then I'll say something about EV, kind of cast the context broadly. So semiconductors, effectively what's happened, if you look pre-COVID and then you look from about 2022 until today, is that investment started going in particularly to the US and to some degree Europe and to some degree the Middle East, coming from Taiwan and coming from Korea. A huge shift from the previous period where US had outbound investment, folks were investing across the world. Just enormous shift. And it's a shift such that if the investments are successful, a big and an important if, because it's not at all preordained that you can build manufacturing capacity and become competent at something so complex. The US starts to have 30% of leading edge chip capacity production. So it would completely shift the playing field of who would be producing at least at the chip stage. All sorts of questions about packaging and other kinds of inputs, et cetera. Very, very complex supply chains. That's one. A second one, at least for the time being, is EV and battery manufacturing. And the biggest, actually most pronounced shift here, and Jeongmin I'm sure will say a little bit more about this, is that China has shifted from being an attractor of FDI, it's attracting a lot of FDI pre-COVID, to a distributor, a funder of FDI, funding facilities all over the world. At the same time, clear here that there's a lot of money that was announced to flow into Europe and also into the US, where obviously there are real open questions associated with what the U.S. demand for EVs will be over the short term. I think the long term is probably clear. But also, I will just say a general thing about FDI over time, and people will understand why I'm saying this. FDI has historically really helped to shift trade in those instances where it went into countries that were open to also receiving not only money, but also the new IP and also the new human capital, the skills, the transfer of the know-how. And that's been a completely essential feature of its being able to take root, and then also really importantly, spur subsequent domestic investment, which often in the long term ends up being much, much bigger than the FDI itself. And so big open question for the US, I think particularly right now, but for these facilities in other parts of the world, how much will actually take root and work versus how much will be announcements, even shovels in the ground that doesn't ultimately transform the way that trade shifts.
Speaking about EV battery, let me ask you this. So the ICE raid of LG Energy Solution plant in the States has made the newsflash, the headline over the past couple of days. Do you think that that kind of immigration uncertainty will impact the FDI flows in the EV battery space in the US going forward?
I think it's far too early to say specifically what will happen. But the thing that I can say definitively is that broadly, as I say, right, for an industry to end up being able to take root in a country spurred by foreign direct investment from another place, the transfer of knowledge and know-how is an essential component of everything. For something, look, I've one allows something to happen and waits a little while and sees what happened. But the question is a good one.
Jeongmin?
Because Olivia is American, so she can deal with all this sensitive question about the US. Let me add a bit of Korean context as well about semicon and EV. So as Olivia said, those big shift is happening. Overall, if you look at FDI inflows into semicon, it increased by 5 times. If you compare before COVID and after COVID, 5 times. How about inflows into the United States? Can you guess how many times has it increased? FDI inflow into the United States. 10 times? 20 times? No idea? Yeah. Over 30 times. How about investment from Korea to the United States? Yeah, also about 30 times. How about investment from Taiwan to the United States? 1,000 times. Right? So US actually became the main destination, right, of the other FDI inflows in terms of those semicon. Right? Then what does that mean to Korean players? Right? So currently the landscape is concentrated, especially for leading edge semicon production capacity. 65% is in Taiwan and 25% is in Korea. And as Olivia said, if US takes up 30%, that means Korea will probably have less share than we have today. What does that mean? So that means there will be global shift of competitive landscape and more competition for Korean players and also for talent. But at the same time, there could be opportunity for Korean players to participate more in the newly formed value chain and ecosystem, innovation ecosystem in the United States, right? So as Olivia said, lots of open questions.
No, but also just sort of to add to this, perhaps less share, but of a much potentially bigger market, right? Because part of what's happening right now is semiconductors they're already central, but they're going ever more central. So that there's that balance going on. One thing to add to all of this, and it goes back a little bit to this question about, okay, well, which industries, what does FDI tell you about which industries are going to be the most important of the future? We're looking right now at FDI flowing most in a couple of these areas we've talked about together, and we can talk about or not the resources that power them. But there are other really important industries of the future that I anticipate will start to get more money as time passes. So look, robotics. We went and we looked and we said, well, where is FDI flowing in terms of robotics investment? There's not much. But boy, if I had to bet, that's not going to be the case for a long time. Like money is going to go cross borders into that kind of an area. It's going to go into robo-taxis. It's going to go into virtual reality of various forms. It's going to go into, right? We can talk about different sets of industries. And what we're seeing right now is the pattern of these industries of the future that are sort of the moment right now. It's also really important, particularly as you're thinking about inbound investment to Korea. Jeongmin talked about outbound investment, to anticipate what those new industries of the future will be tomorrow, to be able to attract FDI in those so that this pattern can play out in the future.
Thank you both. On that note, I would like to open the floor for any questions for the speakers. If you have any questions, please raise your hand.
Thank you for sharing your insights of today's theme, the great shift in trade and capital strategy. So I can understand that there will be a great shift in trade and capital strategy. And actually, there is a lot of report about reconfiguration, reallocation, and change of something. But many C-level business people just, I'm so curious about when will be the last time of this shift. So everybody just know that we are in the middle of the shift, but when is, and then the degree of shift of that kind of thing is more important question. So could you specify the timing of the changing speed and then the degree of your mentioning of the great shift?
I think it's a process. I don't think there's going to be sort of a point and we're going to shift to it. And part of the reason for that is that that in order to shift, actually, go back to Cold War. So there are a lot of people who, after Russia invaded Ukraine, started to say, oh, well, look, is this just going to be decoupling of the sort that the US or the West in general and the Soviet Union had? And the fact of the matter is, like, fundamentally, no. And the reason for that is that we're just so much more intertwined as a world right now that shifts take a lot of time. They're this slow and creeping dynamics. And so I very fundamentally believe that what we're seeing now is the direction of shift that I think will be the rule of the day for the next, call it 10, 15, 20 years. You're not going to get a sort of movement and then we're in a new state of affairs. We'll be in this creeping, shifting state of affairs for quite some time.
And also maybe I share my favorite quote. Personally, it's not business, right? So does anyone sail? Is there a sailor in this room? I'm a ship guy. I don't sail, but I like this sailor's quote, right? And it goes, pessimists complain about the wind. Optimists expect the wind to change, but leaders adjust the sail. Right? So, as a leader, we have to constantly adjust. Things will always change, as Olivia said, and we are entering this very uncertain era, especially in global trade and FDI landscape. I think, as a mindset of a person, that's something that I always have in mind.
So with that, that brings our session to an end. So please give a big round of applause to our speakers. Thank you.